What's up, everyone? Inside of this video, I'm just going to be going over um, basically the trades that I took over the past week, how I'm up on the week using my swing trading executive edge model, and then uh, why I'm trading this model more than my SDL model that you guys know. And yeah, so the reason I've been, the reason I've been trading like swing trading way more now. The reason I've been trading like swing trading way more is that I always wanted to be a more of like a portfolio trader than just like a futures trader or just a gold trader. So having like a swing trading strategy where I could just like execute it. And this strategy is so cool because I don't really have to do much day to day. Like literally yesterday, I think I posted something of like me saying that I don't really have to do anything when I wake up in the morning, and I was already up like $100 to $200 just because of my account size and then letting the swings run. So that's one of the real perks, and because of that too, I don't really get a lot of like the psychology problems that I used to have using this very simple model. So I'm gonna go ahead and explain to you guys. It's very similar to SDL, just on the higher time frames. Um, let's go to my actual account. Let me show you guys just proof. Right now, today we're up $127 on the day. And then if I go to the week, we're up $630, 7% over the overall week. And this used to be my whole entire monthly return right here. Barely this back when I was trading futures. So now let me go over the trades I took and how this actually works. So the way I like to do it is I trade a whole bunch of high growth tech stocks. I'm mainly looking at sectors of the economy that are doing like really good. So one of those for me is QQQ, but QQQ for me is like a little bit slower. Um, so another thing is like I like to put 50% of my account into ETFs, and then the other 50% into like lower names, like, or regular name stocks like Nvidia, Roblox, Microsoft, SMCI, all of those. So sometimes it'll be less than 50% because lower name stocks can be more volatile, and especially with earnings and all of that. Anyways, I don't trade the regular QQQ. This is TQQQ, which is a leveraged QQQ. The reason I trade TQQQ is because it moves a lot more, and it kind of like with the risk as well, I could gain way more inside of the day. The only thing is I have to be like a little bit more mindful with the swings because we can get sharp pullbacks, as you can see right here, where we pulled back a lot. So just being very careful, but I have a strategy for it, honestly. So the way I like to trade it is basically looking for supply and demand zones on the higher time frame. But honestly, one thing I wait for a dip, which is very important. I want to see a huge dip inside of the price, either 3%, 4%, 5%. Before then, I look to put more capital or actually take a trade. So if we look at what regular supply and demand is, let me go over here. When the market is moving higher and pulls back, we call this a demand zone. And supply would be when the market is moving lower, pulls back, right there. We call that a supply zone. So the demand zone would be right here, and we wait for the market to move higher. I'm basically looking for the same thing inside of these assets, but I'm really wanting to see like a huge dip. If I get my price point out, like right here on TQQ, we had a dip around here. It was like 2%. That's cool. But I'm looking for like a 5% retracement, either 3%, 4%, or 5%, before I then look to enter the actual trade. And then, of course, once we dip this low, we're already tapping into a level of demand. And all I wait for then is a break back above, because we know how the market moves. QQQ is an asset where, okay, it's the top 100 tech companies. Unless there's something that's happening broadly inside the economy with tariffs or something else, we're probably going to move higher after making a dip, extreme dip. So after the extreme dip, and us tapping to like a level of demand, I just wait for a market structure shift, or just for the market to look like it's about to shift. So on this day, um, I do look at the pre and post market as well. So it's not really shown on the chart right here because this is just the regular hours. But during the post market, after this dip, I saw that we were pulling back up. And this is when I said, okay, I'm going to use my first attempt at swings. We had this large pullback in the dip. We're starting to switch structure here. We're breaking back above this high right here, this low that we made over here. I also look at NAS 100 too, which is the forex pair. And then I'm like, okay, let me do my first attempt. Got in, and then it went higher. So what would I have done though if, let's say the trade didn't work out or it started going against me? One of the things I like to do now is I like to see my portfolio from a um, kind of like an investment perspective rather than just a swing trade or day trading perspective where I put all my capital inside of one trade. I kind of like to spread out my capital now. So let's go to something else what's a good example? Oh yeah, AMD the other day. So before this all happened, um, AMD, I had a trade open on AMD. It was like right here, I think. Let me put it up. But the main thing is like it hit my stop loss and it went way past my stop because of the earnings that had came out. But even though it hit my stop, I didn't close the whole entire trade fully because I'm thinking about it from a position perspective. I know that AMD is a high growth tech stock, and instead of taking off my whole position, I reduced my position size, um, and then waited for the market to shift again, and then got back in to go higher. Now you might be asking, how do I know how much to put into each position? And that's a really good question. Not that's like a really good question, I don't know. But for me personally, like I do it I put more into ETFs than the lower names, and I just spread it out among the lower names. So it might be like 20% among all of the lower names, and it's just spread out. Because of my account size, it's just spread out. And then I put a lot more into TQQQ just because it's a it's an ETF, and it's one of the best ETFs that I like to look at. Now, I could be looking at other ETFs as well, but I mainly like looking at TQQQ. UDAO is another good one, and there's the one for SPY as well that I look at. I can't think of it off the top of my head. I have to go in my broker account. But yeah, that's how I spread it out. So, but it's kind of like to your discretion. Make sure it's a little bit more balanced. Make sure one stock doesn't destroy your whole entire account. That's like the main thing here. You want to have it spread out between different stocks, just so like one bad day doesn't really destroy your entire account. Like one stock has earnings, it doesn't destroy your entire account. So this is kind of like investing, but I call this investing slash swing trading because we're not just fully investing where we're just like getting in anywhere on the chart and just waiting for the market to go up. We're getting in at specific areas. We're waiting for the market to go up. And we're also reducing our position size if the market comes against us for us to get back in these high growth stocks, these high growth ETFs, and for the market to move higher inside of our favor. Just off this dip alone in TQQ, we haven't even gone right back to the highs, but this dip me putting, oh yeah, I almost forgot. I almost forgot something very important. Um, when I reduce my position size, like when the market dips lower, I reduce my position size. I hold cash on the side. Like I hold a lot of cash inside of bonds and these other assets. So when the market dips lower, I put a ton of money back inside of TQQQ and these other, stocks. So when the market starts to move higher again and I get back in, I'm making back all my gains plus more. So off this move alone, getting back in and it going straight in my favor, I made way more than even this move because I had a whole bunch of cash on the side that I put in bonds and then I put it back inside this account. And if we go back to the highs, this is like a 10% move, I think. You guys already saw from my account, I'm already up 7% ish on the week. That's from this dip and then putting more money in right in the specific area, waiting for it to go higher. And yeah, I think that's it. It's a very simple, it's a unique strategy. Um, it still uses basic old supply and demand, looking at market structure, but it's very cool to use, and it helps a lot when you are it helps a lot when you're trading things and assets that have edge, that move a lot. Yeah. You guys might have seen my low float stock video, which was the video I posted, I think it was a month ago. I still trade low floats. I put a little bit more income into those though than I would my regular stocks like Mag 7 stocks, higher growth tech stocks, just because right now, as you guys can see, like my account size is number one, it's bigger. Um, so I can afford to buy these higher name stocks. Um, I have also have a lot of margin too, so I don't really need to trade low floats as much anymore, or like penny stocks, or invest in penny stocks that will literally go to nothing. Some of them will literally go to nothing inside of a single day, and I don't feel like watching it. The best thing about this strategy that I like isn't even the strategy itself, but it's like the amount of freedom that you get from trading this strategy. Like literally, I haven't. You can look at my group. I haven't taken any more trades than I've only taken like the only trades I opened up this week was this position, opening up this position at the beginning of the week. That was it. And it's Friday now, and I haven't taken any trades. I've just been literally letting these trades run. So it's just like perfect if you're working a job. If you're working a 9 to 5, you don't have time to trade. You don't have time to look at the charts. You don't have time to day trade, swing trade, all of that. This is like an amazing strategy that you can use. So if you'd be interested in learning fully how to use this strategy, um, my link to my one-on-one should be inside the description. You can open that link up and then just schedule a call with me, and then we can see how we could work one-on-one and how I could teach you this exact executive edge strategy so that you can start using it and stop losing money either day trading, swing trading. I mean, not swing trading, day trading or scalping, and start making money long-term swing trading, investing, and yeah. So that's it for this video. Hope you guys enjoyed, and I'll see you guys in the next one.